Hello everyone, welcome to the Echelon weekend newsletter, and let's get started. So to begin with, I just want to say something. Market is very indecisive right now, and when I say market loosely, I mean the S&P 500. I'm looking at the S&P 500 futures right here. Very indecisive price action. Just like we discussed on Friday, there is supply right here, 33.55 and 33.62 level. That's the supply zone, and as you see, it is rejecting it. It is just chopping in a range, so to speak. The higher low is holding for now, so this is just back and forth. I see this right here at 33.35 as the midline. So under this, we go below. Over this back test, we can break out. Now, let's talk levels. As things are right now, even market makers are also kind of on their toes and indecisive, because we see puts long down to 325, coinciding with dark pulls from 329.8 to 325 on SPY, which is 32.42, 32.47 demand right here. You see that is an hourly RBR. So the dark pools and the puts coincide with a demand level on ES. However, on the flip side, for the same week, market makers are long 3400 to 3420 calls, which is SPY 340, 342. So again, very indecisive. What I would say is, if this trend breaks, gets back tested, and can't get above, feel free to short it down to 32.47. If we break out on the upside, back test it and hold it, then feel free to go long to 3400 essentially. On the weekly, there is still that macro line, as I like to call it. This is a very important line to me. Why? Because it's not just pretty, it runs along the top here, but as you can see, it's a breakout, and it's a breakout that has been retested once. Then it was retested again on the crash even, and then when market recovered, when it broke out again over here, was retested, hold, and it's from there that everything kept going. So this is a very important line to me. This is kind of a macro bull bear line, so do keep that one in mind as well. Moving on, while we're on the topic of indices, we're gonna look at NQ. So to start from the weekly, there is this line similarly to ES that is still holding. Again, important line: breakout, back test, holding, breakout, back tested again. Now, it wasn't literal to the penny, but it's a back test. I would like this to hold if Nasdaq is to continue on its bullish run. For now, it's not necessarily bearish. However, when we switch to daily, we see that it is hitting a daily drop-based drop right here, and it is coming back. Now, it's really hard to tell direction. Again, everything is very indecisive. As long as this holds right here, then it's kind of hard to be overall, on the overall macro scale, bearish on Nasdaq. However, if this breaks, then if you switch on a weekly, this is demand right here. This is a rally-based rally right here. Then we have another one and another one. So there are things to support it, even if it breaks down. One thing that is not weak is Russell. So value stocks have been catching a bit more so than the S&P 500 and Nasdaq. I mean, just look at that. It came back to a weekly rally-based rally, and it is going up from there again. These lines are going to make sense when I switch to lower time frames. So this is demand right here. This is RBR. You see the rally-based rally demand came back into it, and they squeezed it up. Now it's in a drop base drop supply. Provided we can get over here and hold, we can break out. If we break out on Russell, this is a very, to me, lucrative long should we break out of this supply, because there's still a gap to fill on the futures, on the Russell futures here. So you can go long on the ETF, you can go long on the futures, whatever you choose. However, I would wait for the breakout. You don't want to just willy-nilly go into trades into supply. You don't want to be a buyer into supply. So in my mind, this is a very lucrative trade should this break out, because it has a long way to go. It's lagging. Moving on from there, we're going to take a look at VXX. And remember, we look at VXX or VX, which are the futures, because they have volume. What does volume mean? It means buyers and sellers. So we can get an insight from this. Overall, on the daily, it's still going down in this channel. It's a downtrending pattern. However, if we want to look at the week to week, and over here, as you can see, this is a drop base drop zone right here. This is demand. Now this supply has been turned into demand. So if this holds at 25.32 as a low end, then this might catch a bid. As for this supply right here that I have, we can go to the 4-hour and it's going to become a little more clear. You can see this drop base drop right here, same thing, drop base drop hitting the supply, selling off. So everything is kind of going to be decided here. If we break out here and hold this as new demand, we're going to go higher. However, do be mindful that this is a gap down here and it could get filled. Over here on the hourly, there is demand on 25.8, 25.7 level. If this holds, it can keep going up. So overall, VIX is kind of, to me, confirming my words that we are really in no man's land. So it would be wise to wait for some kind of a direction breakout or a breakdown that you can long, or a breakdown that you can short. This is still very much a scalper's market. Don't forget, we always tell you there's a time to swing, there's a time to scalp. A ranging market or ranging stocks, you do not want to swing. You want to scalp. If you have a trending market, that is when you swing. For now, we have a ranging market if we look at the S&P 500 and the Nasdaq. Moving on from there, we're going to look at the dollar. So the dollar actually, to me, still looks bullish. Why? Because, like I said, this is demand. As for where I got that demand from, I will show you exactly. It's a weekly RBR. It was in the past newsletters. You see that? It's an RBR. If we switch to the daily, you'll be able to see it a little clearer than that. So there it is. Rally base rally. It's a daily demand. Below that, we have this level, but we never got to that. Now, why is it bullish to me? Because it's holding the breakout. It's catching a bid over the breakout. You see how that line, just like on the ES, the breakouts, the breakdowns, the retests, well, it broke out, came back to retest, and it's still holding. So as long as this level holds on the low end, as long as this breakout holds, I do see supply here. If we switch on the 4-hour, you'll see why I have this level marked. It's a drop base drop. So it's selling off from there. However, should we hold this, catch a bid, and break out above that supply, we could even eventually, not saying next week or the week after that, but eventually we could come back to retest this breakdown. Not sure when it's going to happen, if it's going to happen, but we could come back. This would be my target on a long. Now, after having said all that, we're going to delve into some stocks. As far as this one, there were a huge influx of 230 calls that were hitting the tape going repeatedly. We were a bit skeptic on the flow, but got some calls. Should this run, it could see 230, 235 potential. 215 puts were shorted for next week, so the markets will try to hold this at that level. And as for why, we can go in the hourly chart and see that right here there is a base drop at the 219, 220 level. 215 here is the low end, so we definitely don't want to see this breaking. Why? Because it's a higher low over this impulsive move here. So it's still a higher low over an impulsive move. If this holds as a low end, I mean, give or take a point or two for stop loss hunts, then we believe that this could catch a bid if it gets over 220 and holds it. And as for why 230 level is important, we see 230, 242 supply right here. So it was demand that got turned into supply. So if you draw the line here, it's just a retest of a breakdown. So there is that possibility that it could even run to 240, provided it breaks out here and it holds that breakout. For now, it's still very much in a channel. As you can see here, it's just chopping back and forth into a channel. It's an upward channel, but it's a channel. So on the very low end, we want to see this channel being held. And the low end of that channel is 212, 213, like I said. Just allow a point or two from that 215 level. So as long as that holds, this could catch a bit as well. So it's a good stock to keep on watch. As far as Apple, we waited for this 103 level for weeks. You know why? Because it was rally-based rally on the 4-hour that had an impulsive move up, and now it's kind of stuck in between what do I want to do world of supply right here and demand right here. So if this demand doesn't hold, you see this is a rally, here's the base, then we rally again. Rally, base, rally, back test, hold, rally again. This is a very important level. If this breaks below, it's going to hit 110, slight bounce, probably back test 112, and sell off down to 105, 107. Whales for a while have been pricing Apple sub 100 now after the split, and it's slowly coming to fruition. But market makers have priced kind of a line at 105, 104 for next week, indicating a pretty good downfall from 114 levels should this break down. If this breaks down, gets back tested, and it can't hold, we're probably going to see these levels. So it's going to be a nice short should the market decide to sell off. But do keep in mind and mark these levels. This is an RBR. Over here, it's another rally-based rally between these candles. If you switch on the hourly, you're going to see them very clearly. So I would expect it to dump to here, back test, and then go down. Should this demand hold, though, it could even see 120. So like I always say, keep your biases in check, have your levels ready. These are your levels. There's no I'm very transparent. We're giving you exact levels on what to watch for, and these are the levels. Moving on to the next one, we have Regeneron, which a lot of you are familiar with. It's one of the companies involved with the vaccines. Not to mention that there was news that Trump is being treated with this vaccine. For now, what we can see is you see this breakdown below the lows, and then we have this higher lows right here. So it's in a wedge. It's chopping back and forth into a wedge, not breaking out, not breaking down. Earlier this week, our analysts advised 600, 625 calls were long for mid-October on this pharmaceutical play. And like I said, coincidentally, if you want to call it that, right after they released news that they're about their vaccine, and then it was Trump. So The result of both articles are indicating a likelihood of 600, 625 hitting by 1016 potentially. Our analyst is long at 584 and planning to hold for those levels. And as for why those levels, it's pretty clear. That's where it failed to break out before. And should it break that, then it has room to run before it hits the next supply. And the last one we want to cover is TTD. Earlier on Monday, we mentioned TTD saw call volume to 525. And Jesus, did it hit that. It hit that with a bang. TTD hit as high as 570. It's unbelievable. And it's pricing a potential move to 580, possibly 600 by next Friday. Earnings are coming in November, and this could be TTD's earnings run. Do be careful, though. There is this gap down below. So should it decide to come back and back test, this is a good level to watch. Why is this a good level to watch? Number one, it's a gap. Number two, it's a rally base rally. So you have an impulse, base impulse, rally, base rally on a 4-hour here for 509, 518, which also coincides with, looky, the breakout. It's a retest of the breakout. So it could just keep running. It could just keep running to 580 and then 600. But this is a very important level to keep and watch, not just for next week, but even for farther ahead. So 2 ways to play this. If it breaks out here, comes back to backtest and holds a level here, this could turn into an RBR, and it holds this, then you can just go long from here on. And the second way you can play this is if it comes back into demand right here, rally base rally, coinciding with the breakout right here, and it holds, you can play it long to 600. And that's all we have. I hope you enjoyed the newsletter. I hope it was informative for you. We will see you in the server next week. And do remember, nothing really clear direction-wise. So be careful. Stay in your hands. Mark your levels. Don't trade for the sake of trading. We keep repeating this. Do not trade for the sake of trading. If you see something, trade it. If you do not, wait until you see something. And that's it. These are your levels. Above this, we could see 3,400. Below this, we are hitting this demand most likely. After that, we will recalculate and advise further. Thank you very much.